Okay, good morning. Nick Inman here from VolumeProfileTrader.com. Uh, Thursday, April 12th, and I just want to follow through on the video I made intraday yesterday. We're seeing follow through to what I thought was a low in the markets, and that's great. What we're seeing is point of control now for the month of April at the lower end of the range, and in the 90-day period, we have that point of control now below us. Yesterday and this morning, today, generally speaking, below 13, let's call it 1364, was rejected every time on the S&P futures, and it ended up being a nice buying opportunity. So what you're seeing now is some follow through to the upside. I would be looking at this 1403. Let's call it 1390 to 1400, just to make it easy. That's where you would be looking to sell or take some profits. Now, with that said, I do think some names are very interesting buying opportunities, and it goes with sectors that could really push this market to new highs. So I'm going to go through them really quick and show you how they're performing this morning. Okay, metals and mining definitely outperforming the market, up 3%. Definitely an oversold bounce, but every time a price has gotten to these levels, has it been right to be a buyer or seller? It's been right to be a buyer, and the move has actually always been from, let's call it $9. So I'd kind of look at, minimum the top of the channel, and that's kind of your minimum target, but really you'd be looking for this to continue higher. If we break this trend line that we've formed over the last couple of months, perhaps we go and test the 53 to 55 range again, which has been resistance, was support, became resistance, and should be resistance again. But you look at the names that we've been talking about, Teck Resources, on the 10th, when everything else was down, Teck Resources didn't go down. I mean, it did for a little bit, but it traded near the highs of the day. What have you gotten since? A nice move to the upside. It's up 4.5% today. So this is a name that works. Hopefully you started nibbling in it yesterday. I know I did. I added to it this morning when it was up, I want to say about 1%. So, I mean, really reaping the benefits if you have your names that you want to buy pointed out or laid out somewhere. One thing to show you is, as long as we, in my opinion, as long as we stay above this point of control for the year, this should be a stock that may be on the verge of bottoming, and perhaps we go up and test the mid-40s again, which we have every time. That's what I'm kind of anticipating. But if we get above this 200, this 150, basically if we trade back up to 42, more buyers should come in just for the sheer fact that it's above the 200. That kind of goes with Freeport. It's at this bottom end of the range again. If you're speaking, broadly, 1, 2, 3, not really 4, but you have 4 times that it's been down in these levels and it's been right to be a buyer. Why not again? And that's kind of what you're looking for. Now, with that said, if you believe that this is going to bounce, you do have a bunch of resistance in this 39 range or so, 39 to 40. You have to watch out, and your ceiling's pretty low. So if you're trying to play this, I would define your risk and go with some type of call spread, and really kind of go from there. And I would go pretty short in terms of duration. I think you can go out to next week. Which are the monthlies, and maybe the 37 by 39 call spread, and if they're trading appropriately, maybe that's something that you want to look to get in. Walter, I'm going to have to do more work on this. Let me get rid of these drawings. But we've held these lows once again, and I tried to get into this name about a month ago, and if I remember right, it worked, and then it didn't work. I don't know, but it ended up I remember I took the position off. Don't remember if it was for a profit or a loss. I'd have to go back and check. But you kind of got this triple, quadruple bottom here. I don't know. What's important is we're trading up above that, and we are at the top, close to the top end of the range. So what I'm looking for, and it's hard to buy off of 4 days of just power move from 56 to 60, 62.75. It's really, I don't recommend buying that. But if you want to buy like and I'm being honest when I say this, like a tenth of a position, therefore you're involved, and you kind of use this range from 64 to 57 or so. That's kind of your range to watch. If we break above that, you definitely want to increase your exposure for a move up towards about 76. That's a big move, and so you kind of be patient here and let it do what it's going to do. But if you want to get involved, there's nothing wrong with buying a little bit. CSX, this looks like, although volume's light for right now, looks like it's going to try to break out of this range. It's definitely an oversold bounce from what has happened, but we've held this 21 level or so every time, and it's up 3.5, or I'm sorry, close to 3%. And you kind of look at this. We've talked about it before, this 22 to 21 range. That's your pivot basically, and we didn't dip below it. So now what we're looking for is a move above it. We want to see this thing break out. We want to see $25 on CSX. So that's just something to be aware of. CVR Partners, wasn't the last 2 days a pretty good buying opportunity? I'd say so. It looks like this wants to go higher. I'm not saying anything else other than if you want to look to take profits, I'd be looking at least to 31. Medifast, even on a strong day in the market, this is pretty weak, but I do consider this. This is, in my opinion, a set it and forget it trade. Don't really worry about it. Earnings just came out last month, and we've basically been trading higher since then. Like I said, I don't really think this is one you want to sell until it gets to the mid-20s. We may have a little bit of resistance around $20, but this does look pretty good. ConocoPhillips giving you a bounce. It's a tradable bounce here. You just put your stop below these recent lows. However, if it comes back down to the low 70s, I think you can pick it up there too. Las Vegas Sands, what a surprise, another 52-week high. One thing to note is I bought 57.5 calls when it was at a break even on this big up day. That up day ended up going up 3% or so. I took profits there. Ended up being a good trade for the following day, taking profits, but it kept going higher, or it has since then. Basically, this day was a washout, and we've continued higher since. I kind of wish I held at least a quarter of that position because it'd be sitting nicely right now. Potash giving you a bounce, tradable bounce. You're at the lows here, so you can define your risk, but it's a bit frustrating. I'm a little underwater in this trade as far as my cost basis, but this is a longer term viewpoint and waiting for it to turn around. Agrium, this is one I continue to slowly accumulate, pretty much every day, and I like the bounce that we're seeing, and I want to see more of it. All right, gold, our thesis, or I should say my thesis, but what we've been looking at is gold to bottom. I still am a believer of this, especially every dip down gold goes, it entices me to buy more. And, my exposure is usually through call spreads on the GLD. I continue to buy, I continue to trade around gold with $1 to $3 spreads on GLD calls or puts, and it's too short term to kind of call them out. But when we get those longer term, maybe 10 to 20 day moves potentially, that's when I'll go for it. And surprisingly enough, I'm the 161 by 164 calls, the call spread we had, still valid, and I think that, for example, right now, and this is, you can do this, you could buy the 162 calls and sell the 165s against them, expiring next week. I'm sure they're trading for about $1 or something like that. So you have a risk reward of 1 to 3, and that's not too bad. Could work out. I'm long the 161 by 164, so not too far off. But I do think gold. I think it's only a matter of time before we go above 1900 on gold. Shouldn't take too long, especially with all the printing presses going off. Oracle giving you an oversold bounce. Glad I took off the 29 by 31 call spread back on, let's see what day it was, the 9th of April, right before it broke down. You can kind of see, though, what it did was it traded higher from earnings. Remember, earnings came out, it was actually this was the day after. We got a big flush out, 100 million shares nearly, and what we saw is basically a trade back to the bottom end of this range. Looked like it was going to break out, and then once we got this final day, those on light volume, what you saw was after a nice day on the highest volume printed, since it kind of started to come back up, we couldn't push back and make new highs as far as this range, and we kind of continue to roll over against these moving averages. Kind of makes you feel that, maybe this isn't done with its down movement pretty much. And what I'm ultimately looking for, as you can see these lines on a longer term frame, you can see we have basically a triangle that's in the formation. What I was looking for was this point of control to hold and blast this thing off back up to the mid 30s. I do still think that could possibly happen. You are at, pretty important lows here on Oracle. So, and I still own the 29 by 31 call spread, so it's going to be worth watching. I just own half a position, can easily add on to that. So I'm just going to kind of watch it and see what it's going to do. Polaris is giving you a monster bounce off the 50-day moving average. It's kind of hard to buy now, but it's easier to buy into the weakness. Celgene continues to trade sideways, but it's held up very nicely over the course of this market downtrend. And last but not least, the banks giving you, underperforming the market, but giving you the bounce that you're looking for. Bank of America off the 50-day moving average. Not really volume support, but the 50-day bottom of the channel and an uptrending stock. That's usually good for at least some type of bounce. Goldman Sachs, this was kind of the way that I'd be viewing to play any type of market bounce. Pre-earnings, maybe we get a little bounce into earnings. I wouldn't hold this over earnings. However, their trading for the first quarter was probably really good. Morgan Stanley, you're getting a nice bounce here, but you're still in this range. This, you kind of got a triangle pattern, so be careful. And maybe you want to let this, do what it's going to do first. And if we start to trade above these levels, then you can take a shot and look for more upside, at least to basically where it broke down, which was 1935 or so. And that's kind of the 50-day moving average. That's what you'd be looking for. So I hope this intraday video kind of helps, gives you an idea of what I've been looking at, why I was playing for a market bounce, and kind of so forth and so on. Which kind of brings me to one more: silver. This, despite gold not working, silver continues to hang in there. You have a lot of people who continue to come out and say they're pressing silver to the downside. They're short silver. This is giving you a tradable bounce. We have broken out from this range, and what you'd be looking here is, to make sure this range holds. We have pretty decent volume, not great, but decent, and we could see further upside in silver, at least a trade up towards 34. but at the same time, you look at silver, and just looking at this potential pattern, and I don't know if this qualifies it as a bull flag or whatever. You have a series of lower highs and lower lows, and if this is some type of higher low here, and we get this kind of movement, I'm kind of looking at $50 again on silver as a potential move. So maybe not a bad time to buy a little bit of silver. I think you have a cheap shot, really, if you place your stop under these most recent lows. Here, let's use the SLV because that's what most people will use. You have a cheap shot under these intraday lows. Let's call it, you put your stop under 30, you're at 31.24 now. You risk about $1.30 for a potential move of $2.75. That's kind of your minimum target, and if we get above that, then perhaps back up to what we originally failed against, which was around 36 on SLV. And you never know, we could press back up towards 40, which is the value area high. You can see we have a chunk of meat, and this is why the value area is so good. For this 2-year chart, we're closer to the value area low, this blue line, than the value area high. So if you think that silver's within value and it's within range, then you'd be looking to buy the lower end of the range to sell the upper end, and it's, not a bad idea. So what I'm going to show you now is what's going on intraday. This is just like volume profile, except for it has these letters here. These letters represent time, for example. And what I'm gonna do is zoom in some so you can see it. Bear with me for 1 second. And this is what I use to day trade the S&P futures. So what we're looking at here is, just like on Thinkorswim, you have your high volume areas. You can see I have them outlined in this beige color, and so what we're doing is we're trading from one high volume area to the other. Guess where we got? To the top of this, the bottom of this high volume area, and we've been trading off since. What we see here is this is what the market does, and you kind of get patterns like this quite often. It's basically a P pattern where the market will trend higher and then kind of consolidate sideways for the rest of the day or something like that. And this yellow B, yellow C, those are your point of controls for the 30-minute periods. I would assume that 37.71 holds for now at least. It's the bottom end. That's what I consider the bottom end of the range. But if I combine them, 72, 75 or so, that's your point of control for for today so far. And this is my viewpoint. If we can't hold 1371.25, we'll probably trade back down towards this high volume area. But what we want to see as buyers of the market is to see it push up into the 74 range and get up to 77. From there, you just want to kind of see it hold that range. So for right now, we're kind of in the wait and see approach. If I bring up a chart here, so you can see the market open, took off to the upside, and we've been trading sideways since. So 71, what was it, 71.25 or 71? I think it was 75. That's kind of your bottom end of the range that you're looking for, and seeing if we can hold it. So you get the idea pretty much. So anyways, I hope this video helps. I hope you are long some of the names that are working, like ATEC Resources. We recommended those 2 days ago, so it gave you plenty of time to get involved in this. And now that I bring up the 2-year chart, this looks even better. It looks like it will trade back up to the mid-40s, so something to be aware of. This is just 2-year charts. So anyways, take care, have a good morning, have a good rest of your trading day, rest of your day. I will have a video out later on tonight.